Hello, folks. In light of the price action in silver, i.e., vertical, I've been thinking about hedging. Do we hedge? Should we hedge? If we want to, how do we do so, etc. And so, what I'm going to talk about, 10 minutes, I'm going to cut it off at 10 minutes. Uh, Silver price today, and where is the risk? What is the real risk out there for us as precious metals investors? In my opinion, there's really only one risk. I got four listed here just for good measure. A list with only one item on it, it's not much of a list. And so, but in my opinion, item number one, that's really the only risk we're facing right now. It's the paper markets, that's CME, it's COMEX, silver and gold in America, and then of course LBMA, they're playing the same games there. Yes. And so, anyway, that's the real risk in the precious metals world, in my opinion. We're going to talk about these other, this kind of related. And so, they along with their margin hikes, they come in and have a concerted selling of paper silver. And of course, the objective is to break the price uh, of the metals, whether it's silver or gold or both, on the markets, paper markets. I want to make I'm trying to clarify my language at this point because I believe we have two different markets to talk about. There's the paper market, which, who really cares at this point? And then there's the real market, which of course is physical silver. If you need physical silver, who cares what the paper market's doing? Money fleeing the mining stocks. Yeah, that could happen. We'll talk about that. Demand for silver and gold decreases. Yes, that is certainly possible. We'll talk about that. So anyway, let's keep rolling. CME margin hikes. Again, in my opinion, this is really the only risk, and truly, I'm not exaggerating here, folks. This is the only risk we face right now in the precious metals markets. It's that the Western CME and LBMA are going to continue hiking margin rates in an attempt to break the current rally in the price of both silver and gold, primarily silver at this point. And so I've shared this before, but let's revisit. So back in January of 1980, they just outright changed the rules. I mean, this wasn't, we didn't hike margin, none of that. We just, it's like you're playing Monopoly with your siblings, and in the middle of the game, you start winning, they changed the rules. And that's exactly what happened in January of 1980. COMEX changed the rules because they were losing. And so, again, the only real risk we face at this point, and again, I keep going back to, I don't really think it's that big a risk. But anyway, let's continue. And then in 2011, COMEX raised margins 5 times in 9 trading days. And that pretty much marked the end of that price rally. And again, there's the paper markets controlling the precious metals sector. And so that happened in both 1980. Well, I can't speak to that. I have to take a closer look at mining stocks back in 80, but certainly in 11, this action by the CME broke the back of that precious metals rally. And so let's talk about current action. Back in December, it's only a couple of weeks ago, they hiked margin levels twice. And so we got two margin hikes pretty close together in 26. And so we're at 18th today. So that's this month. They changed their calculations from fixed prices to percentages. And so now the margin rates are based on a percentage of the price of the metals, which makes some sense. It's like me switching to log charts. When prices going vertical, log charts, excuse me, make some sense. Similarly, going from a fixed margin rate to a percentage when silver is going vertical, that makes some sense. This change, I don't know that I won't say, yes, I will say, buried in this pricing change, perhaps intentionally buried in this pricing change, was another margin increase. And so we have to acknowledge at this point that we've had 3 margin increases in both silver and gold back in 2011, and 5 margin increases broke the back of the rally at that point. Let's continue. We're talking about the paper price of the metals. Who cares? I mean, in my opinion, at this point, again, we've got 2 markets. There's the paper price, there are the paper markets in the West, and the real markets are physical metal in my hot little hands. And what does that cost me? Because I don't really care about paper. Paper's great for the criminals on Wall Street to play with. I care about physical silver and gold in my hot little hands. What's the cost? And so anyway, all of this conversation about, CME, COMEX, margin hikes, it's paper. It's paper. Anyway, let me get off my soapbox. I'm unclear on this point. The Shanghai Futures Exchange, so we have the SGE, the Shanghai Gold Exchange, and then comparably there is the Futures Exchange, Shanghai. And I don't know, is shorting, naked shorting, is naked shorting of the metals an issue on the SFE? Basically it's the paper metal games. Is that an issue on the SFE? I don't know. I hope that they are doing something to control that. Clearly we don't here in the West. Let's see. Yeah, and again, this ties back into, okay, they hike margin rates another time and launch another concerted attack on the price of the metals. Okay, so COMEX and LBMA, silver drops to $55 an ounce. It's still $100 plus in China. I mean, it's just, at this point, which again, hate to sound like a broken record, just another data point supporting the idea that there are 2 different markets at this point. We got a bullshit paper market, and we've got a real market if you want physical metal. Physical metal is going to cost you $100. So, you want to buy paper or you want to buy real metal. Yeah, anyway, those 2 go together. Money flees the mining stocks. I mean, yeah, that's certainly a possibility. But we'll look at a chart here in a moment. Let's go look at it right now since I'm, let's see. This is a long-term chart. We're in the weekly time frame. I'm using the HUI, as my proxy for the mining stocks because I have the most data for UE. And so this is going all the way back to 96. I've got data for UE, and so I can do this comparison against the SPX. And so anyway, I've got some interesting things that I'd like to say about this chart, but we're at 9 minutes and 30 something seconds. I'm going to cut it off right here, folks. I'll come back at you with part 2. See ya.